Welcome back to Deconstruct, the podcast from The Real Deal.
Thanks for tuning in, everyone.
I'm Lila.
And I'm Hannah.
We have a lot of news for you here this week.
We do. First, how Wall Street bonuses are affecting real estate in New York.
A former REIT exec heads to court for fraud.
And our commercial bureau chief, Rich Bachman, joins us to talk about how alleged fraudster Josh Schuster's victims are picking up the pieces.
Let's get started. Let's get into our New York headlines. First, Wall Street bonuses have hit a new high with a pool of $50 billion. That's the highest in 3 decades and means average payouts are about $250,000, with top execs and partners making a lot more.
So tell us what that has to do with real estate.
Well, $50 billion is a lot of money, and the idea here is that this could boost real estate buys across New York. Wall Street is doing very well despite some economic uncertainty, and those employees have money to burn.
So we're looking for some ripple effects. Who stands to benefit the most?
Well, we're likely to see the biggest effects probably in the luxury market and probably in Manhattan. But we can't forget about that other destination for luxury buyers, the Hamptons. Industry observers say Wall Street and the Hamptons are joined at the hip, and by some counts, about half of buyers there work in finance.
Wow. So if there is a boost based on these bonuses, what will we see?
Well, we'll probably see higher home prices as more money chases scarce supply. And as we talked about last week, there was also this fear that wealthy buyers might flee New York, now with Mondani in Gracie Mansion, but we just don't see any evidence of that happening.
Up next, we now have a court date for the former executive from Vornado Realty Trust, one of New York's largest landlords, who is charged with stealing millions of dollars from the REIT.
Okay, remind me who we're talking about?
Jared Solomon was a leasing executive with Vornado for decades. Back in December of 2024, he was arrested and charged with embezzling some $9.5 million from the firm over a period of 15 years.
Wow. Okay, what was his scheme here?
Well, he allegedly created a web of fake broker agreements and fake invoices so that he could basically wire money to himself. And apparently, he only raised eyebrows fairly recently among colleagues when he bought a very expensive house in Westchester and then a fancy apartment on the Upper East Side.
How did no one notice this for 15 years?
Well, Solomon had pretty close control over Vornado's sign business. In addition to traditional real estate, Vornado is the largest owner of advertising space in Manhattan, so they own those big LED signs in Times Square and Madison Square Garden. Solomon's control over that seems to have allowed him to keep this alleged scheme going for a very long time.
Okay, and what happens next?
Well, Solomon's trial is set to start this month, and he could face up to 20 years in prison. So we will be following along as the court case progresses, and you can follow along with us on the site.
Next, we have an iconic studio in Queens that is facing foreclosure. This is Kaufman Astoria Studios in Astoria. It's where Sesame Street was filmed for a long time, and now where a lot of these streaming shows like the Sex and the City reboot shoot now. It claims to have the only studio backlot in the 5 boroughs.
So what happened?
Well, we don't have a ton of visibility behind the scenes, but the studio took out $340 million in 2021, and the lender is saying that the loan expired in November and hasn't been paid back.
Who owns the studio?
So Hackman Capital bought the studio in 2023 for about $600 million, and they haven't been doing so well. They recently lost the Radford studio in Los Angeles to Goldman Sachs after a $1.1 billion default. And Kaufman Astoria was originally supposed to be part of this big Innovation Queens mega project, but that fell apart last year, and we don't really know how that's affecting them.
But New York has been big on trying to attract film and television production for a while, right? I mean, I keep seeing all of these ads for it on the subway.
Yeah, the city and state have been pushing to bring studio space and film production back to New York for a while, specifically with tax incentives. There's a big studio opening on West 54th Street, Sunset Pier 94 Studios, and there's also studios opening in Brooklyn.
So is all of that new space starting to compete with Kaufman Astoria?
It's possible. There's also just the fact that less production seems to be happening in general. Jobs in film, at the very least, really haven't recovered from the 2023 strike, and the productions that are happening seem to be spending less money. So we're definitely looking at an industry in flux.
Let's get into our big story for the day. We cover a lot of real estate frauds and misdeeds here at The Real Deal. And while it may seem like the story ends when the alleged fraudster is convicted or pleads guilty, for people involved with the crime, that can be just the start of a new chapter.
Rich Bachman, our commercial bureau chief, has been covering one particular alleged fraudster for several years now, Josh Schuster. And in our latest magazine, Rich dug into the next story, how Schuster's former investors are trying to get their money back. Rich, welcome to the pod.
Thanks for having me on.
So take us back first and tell us how you started covering Josh Schuster.
Sure. So in the, mid-2010s, Josh was this promising up-and-coming young developer. He had a grandfather named Jack who was actually a big-time developer in the 90s working with the Zeckendorfs. But Josh didn't really grow into that world. He's from Ohio. He went to college at Tulane in Louisiana, and he worked his way into New York, and he started working with this guy, Dan Hollander, at a company called DHA. And I remember one of their projects was a parking garage that he was converting on the Lower East Side. And if you were building a new building, there would be limits on how many parking spaces you could put in it. But because this had a C of O for a parking garage, he could provide a parking unit for everyone who bought in there. And that was a selling point. And it was stuff like that jumped out at me about Josh, just sort of clever. He was very good at selling stuff like that. And I think a lot of people, wanted to work with him.
Okay, and when did he strike out on his own, and how big did he get?
So in 2016, he started his own company, and he called it Silverback. And he had some sort of partnership with this company called Silver Peak. And you can draw your conclusions about, why he would name his company something so similar. So Silver Peak is a big deal. They're a big asset manager. They manage $26 billion worth of assets. And they're in this building on 57th Street. And it's one of the premier offices in the city. Eastdale Secured has their office there. Wyckoff has his office there. So it's a Nobu, the restaurant, is in the base. It's a very happening chic place to be. And Silver Peak let Josh work out of their office. So it really gave him this stamp of approval that he wasn't just some, mid-30s guy hanging up his own shingle, that he was, legit. He bought this apartment building in Long Island City with this company, AEW Capital. They formerly owned stakes in Willis Tower in Chicago, One New York Plaza at the tip of Manhattan, which is the biggest office building in Manhattan. So again, he was doing deals with major players.
How did things start to unravel for him?
So in 2016, he met this developer, an Argentinian named Claudio Soifer. And Claudio had assembled this development site in Gramercy near the park. It was on 2nd Avenue and 21st Street, and he was looking for someone local to help him develop. And Josh signed an agreement with him to develop the site. And from what we gather, he was already borrowing to pay off people at this point. Things were starting to come unraveled when he was doing this. He had brought on some early investors, and instead of being able to pay them out with legit funds, he had to bring in new investors to pay them off. And prosecutors later pointed to this as evidence that he was intent on committing fraud from the beginning.
And what exactly was Schuster indicted for, and what did he plead guilty to?
He was arrested May of last year, so a year ago, and he was charged then with 2 counts of fraud. One is wire fraud, one is securities fraud. And then a few weeks ago, he pleaded guilty to the securities fraud count. The maximum charge on that is 20 years, but when they look at the sentencing guidelines for a first-time offender, the maximum is a little bit more than 5 years.
And so your story this month actually gets into something that I think is almost more interesting than the fraud itself, which is all of these pieces and these sort of spurned investors who are left behind. So tell me who you found was kind of holding the bag for Josh Schuster now that he's pled guilty to this.
Right, like you said, it's this untold story. The FBI and the prosecutors, they did their job and proved that, he stole money from people. It's not their job to find out who gets the profits from this condo development that he sold to a lot of different people. So one of his first investors in the project was this guy, Harry Carton. So he's a second-generation real estate developer. They got a lot of money. He had sold a building and had $5 million that he was looking to reinvest. So he gave it to Josh for half of Josh's stake in the project, and Josh had half, along with Claudio had the other half, so essentially a quarter of the project. And Josh was supposed to invest it in this development, and the prosecutor said right away he took it and he put it into his bank account. He paid off some earlier investors and just spent on his company and his lifestyle. He was living beyond his means, and that's where the money was going.
So Carton is one, and then there are two other characters you found who were kind of left behind by Schuster. Tell us how they got involved.
Right. So he had an earlier investor. It was a guy named Daniel Silber, who's just like sort of a wealthy guy. A lot of the investors in Josh's projects were wealthy friends, family members of employees that he had. He did these like big deals with big investors, but there were a lot of like friends and family involved too. So Daniel had invested in the project, and at some point he and Schuster had a disagreement, and Schuster bought him out. And the way he bought him out was by having one of the LLCs that Carton had invested in sign a promissory note. So he's financially engineered this buyout, but put the project on the hook for it, not himself, which is a no-no. He's essentially, double pledging interests. So eventually, Josh fails to repay this loan to Silber, and he sends a note to Seufer saying, I have this agreement with Josh. He has failed to repay me. I'm putting you on notice that I can take over these interests that he's pledged. And that put up a big red flag for Seufer because Josh isn't supposed to be doing that. Josh had taken out another loan with a guy named Alex Weiss, who is a construction contractor who had worked with him on other buildings. And this, from what I gather, has nothing to do with the Second Avenue project. Josh didn't repay it. And this guy, Weiss, got the court to grant him a judgment for it. The interest that Josh had pledged as security for that weren't enough to cover that. So for some reason, another judge in another case said, here are some 30 entities that Josh is known to have, some of which were in the Second Avenue project. They're up for auction to satisfy this judgment. Weiss won the auction for that on the courthouse steps, and then again sends Seufer a letter saying, hey, I won these at an auction, a court-ordered auction. Watch out for me because I'm going to come and try to take these so I can get paid whole for, what Josh pledged me.
And how is this Second Avenue condo project doing now?
So once Claudio started getting all these notices, he removed Josh from the project and he brought on a new developer and they finished it. And they sold out most of the units. Claudio took a retail condo at the base of the building, which was the JV agreement with Josh said that he would take it as part of his profits from the building. And then there were 4 other apartments left, including 2 of the best penthouses at the top. And in condo development, you usually sell out all the units below, and that pays off your construction lenders. And then you've got, 2 left. And if you can make money selling those, that's your profit. Claudio said that it wasn't clear that once they sold all the units, they would be able to pay off the construction lender. Now, everyone who wants to get their money back would be sort of skeptical about this because they may not have all the financials that Claudio has, and you could see why they might think he's trying to cut them out. So what he did was he took out his own mortgage and he bought these 4 units, which he says was to pay off the construction lender. So he owns them now. They're outside the JV. They're essentially out of the reach of everyone who wants to try to get their money. And that's when Daniel Silber, who died in 2023, his partner now acting on his behalf, Harry Carton and Alex Weiss sort of got together and said, look, we need to work together to try to get Claudio to stop making away with this money. One of their concerns is that because he's Argentinian, he could sell the apartments, put the money in his Argentinian bank account, and then it would be out of the reach of the U.S. courts. So they said, we need to work together to stop him from doing this, and then we can worry about, fighting amongst ourselves. So in 2024, the judge issued a temporary restraining order that restricts Schuster from selling the apartments. And, that's where they stand now.
Do you think that ultimately these investors are going to be able to claw some of their money back?
So there's part of two parts to that. So in the criminal case, the federal prosecutors drafted this $13 million asset forfeiture agreement with Josh, which is his agreement to pay back the $13 million that he stole. Josh doesn't have $13 million, so it's more of an IOU that at some point in the future he'll repay that. When it comes to the project, I don't think that there's enough profit left on the Schuster side to pay everyone everything that Josh promised. He just promised more than there was left. So if they can work out with the courts to get Schuster to cough over the profits that were due to Josh Schuster, then it will be up to the three of them to figure out, an equitable way to split that up.
All right. We'll be watching certainly to see if they can figure it out. Rich, thank you so much.
Thanks for having me.
Now we're going to go through some national real estate news. We're going to start this week with a more disturbing story, I'm sorry to say. Jerry Lewis, one of the driving forces behind Chicago's 1901 mega project, was killed last week.
Terrible news. Lila, tell us what happened.
Prosecutors are saying that Lewis was ambushed and shot in broad daylight as he was moving between offices. And the information we have so far seems to imply that this was targeted. The state attorney's office said that suspects were waiting for Lewis for about an hour and a half.
Wow. Do we know anything about the suspects?
Both of the suspects that are in jail right now have prior criminal histories for firearm offenses and armed carjacking. Obviously, they are presumed innocent by the law right now, but police are saying that officers personally witnessed the crime and saw the two suspects exit a vehicle and open fire on Lewis.
Wow. Have officers identified any potential motive at this point?
Police say they haven't established a motive for the killing yet. But Lewis was also a recognizable figure in the area for his role in Chicago's 1901 project, which is a multi-billion-dollar effort to redevelop Chicago's near West Side corridor.
Wow. Well, terrible news, and our thoughts go out to Jerry Lewis's family and the whole Chicago real estate community. Now, let's go on to some traditional real estate headlines. Down in Miami, we're covering a small lease that has created a lot of hype.
Tell me more.
So, tech company Palantir, which has a $350 billion market cap and was founded by the likes of Peter Thiel and Alex Karp and Joe Lonsdale and others, announced it would move its headquarters from Colorado, where the state is starting to regulate AI, to ever-friendly South Florida.
Another big company moving to Miami.
Well, sort of. Brokers in Miami are, of course, very excited about this. Palantir is a big and very buzzy company, but they don't actually seem to be looking for all that much space. They recently listed a co-working space on Biscayne Boulevard as their main address, and brokers in the know have told us that they're shopping for around 3,000 square feet.
How do they plan to fit 4,000 employees in 3,000 square feet?
They don't. They definitely can't. And Palantir is going to keep its large offices in New York and DC and several sort of medium-sized offices across California and Colorado.
Okay, so this is a headquarter move in name only then.
Well, it's not clear. Maybe in the long run, the foothold that they're grabbing right now will turn into, a full corporate relocation. But in our latest magazine, reporter Lydia Dinkova tried to break down, what's real and what's hype. And of course, it's not clear what Palantir's move will be in the long run, but she was able to look at the Miami development market and how it's responding to these kind of CEO-only relocations and how developers are looking to create these little jewel box HQs kind of made just for them. So you can read that story in the latest magazine.
All right, well, let's finish with a lightning round. Hannah, do you think you could tell us all of the celebrity real estate news in 60 seconds or less?
I think so. Should I try?
Mm-hmm.
All right, ready? First, Westchester house hunters can buy Drew Barrymore's former house in Harrison, New York for $5 million. She bought the 12-acre estate for $4.4 million back in 2024. The King of Queens, actor Kevin James, picked up a $17 million home in Boca Raton, Florida. That's a 6-bed, 8.5-bath mansion in the ritzy Royal Palm Yacht and Country Club. The estate of music icon Quincy Jones, meanwhile, has cut the price on his Bel Air mansion, now listed for the low cost of just $39.995 million, originally asking $60, so that's a pretty good price for almost 25,000 square feet and 2 acres in Bel Air. Reality TV fans can buy the Hummingbird Nest Ranch, a Simi Valley mansion used widely on TV, including for date nights on The Bachelorette. And last but certainly not least, if you are a fan of the Disney classic Hannah Montana, Miley Stewart's house in Malibu opened for limited bookings on Airbnb.
Sounds like fun. That's all we have for you this week. Next week, we'll take a look at the Mamdani administration's first 100 days in office.
If you have thoughts about how they've done so far, you can let us know at podcasts@therealdeal.com.
Thanks for listening.
See you next week.